Thank you so much, Vince, and thanks to AGM for hosting this important event and hosting us here. Today, I'm going to share with you some preliminary findings from the research initiative that Vince just introduced. This is a joint initiative between the organization that I work for, the Cambridge Centre for Alternative Finance, which is based at the University of Cambridge in the UK, and with the World Economic Forum and their Centre for Financial and Monetary Systems. So I want to start with, why is this research important? Why did we start this initiative at all? In as much as the fintech industry has seen huge growth in the past decade, there is still a lack of empirical research and data on fintechs themselves and from fintechs, the voice of fintechs, what they experience, how they find the market, how they experience different regulatory environments, and how they're targeting customers. The fintech industry finds itself right now at a unique time. After gaining so much ground in the past decade or even more, the ecosystem has a lot of opportunities with the growing digital economy. And they also have a lot of challenges to navigate, also with the growing digital economy. And fintechs right now are reviewing and revamping their business models to reach new users, to incorporate and to use new technologies. And at the same time, regulators and supervisors around the world have increased their focus and the priority that they place on fintech and digital finance to regulate fintech better, to better protect customers, to control for risk, and to allow fintech to flourish and really contribute as much as it can to the economy. So we see a real need for timely and independent research to inform decision-making. And that's across the ecosystem, decision makers across the ecosystem, regulators and policymakers and fintechs themselves as they seek to expand to new markets. We really see a need to go beyond generalizations, yes, see global trends, but also to understand more nuances. So who did we survey? We took a panel approach to research. We assembled a panel with representation from 6 regions, 5 main retail-facing fintech verticals, or fintech business models. And over time, we envisaged that these verticals could change as the industry continues to develop. Just before I go into the findings, I really want to emphasize we really see this research as global and regional. It's really intended to serve a global audience. So what are fintechs telling us? I'm going to give you a small snapshot. The full findings will be released in the report, which will be in January at the World Economic Forum annual meeting in Davos, really just 6 or 7 weeks from now. First, the fintech industry is really showing strength and resilience right now. One metric we used was customer growth. And following some of the really big drivers that we saw during COVID, fintechs are still reporting strong customer growth in the past couple of years. So you can see the global average in 21 was 55% growth rate, and it dipped a little bit in 22 to 52%, but still a 50% customer growth rate is strong. I also want to highlight here that the MENA region, since we're here in the Middle East, North Africa region today, is showing higher than average customer growth rate, very consistent. So indicating, a really strong growth rate here in the region that's consistent and demonstrating strong customer demand. Yet all is not growth. As I said, we'll be going beyond generalizations. We also asked fintechs about the main drivers and hindrances to growth. And macroeconomic factors and the funding environment together stand out. It's not surprising to see responses in these areas, given how intertwined they are. Factors like global inflation, high interest rates, monetary tightening have a broader impact on capital markets and the funding environment, and as well as consumption behaviors. What is particularly interesting is finding that this sentiment is really reflected globally. It's not unique to one particular region. As for the MENA region, macroeconomic factors have come out clearly as the most cited hindrance to growth. It was rated a bit more frequently than the global average at 59%. So as much as this is reflected globally, fintechs have differentiated views about the current funding environment and its impact on its ability to grow. So let's be sure to put this into context, though. The past decade has seen very high fundraising levels for the fintech industry. We saw acquisitions and unicorns drive valuations, fundraising very high. The past couple of years, the funding has gone down. Fintech is not immune to some larger patterns in the global economy and capital markets, and in venture capital especially, as a lot of fintech fundraising was driven by venture capital. This context is important as we understand our research, which shows nuance. While most fintechs are citing the current fundraising environment as a hindrance to growth, there are still 34% of our panel that regard the funding environment as supporting growth. Funding dollars, though, and values have certainly differed by region, and the fintech experience reflects this. So let me give a couple examples. You'll see already on the screen, we have this example of Latin America and the Caribbean. This region saw the largest drop in funding to fintech in 2022, and that's according to CB Insights. And our surveyed fintechs in Latin America region disproportionately found fundraising as a hindrance to growth, far more frequently than the global average. Now, contrast that with sub-Saharan Africa. More African fintechs in our sample found the funding environment as supporting growth. We can possibly attribute that to the fact that in 2022, although funding had gone down, it's still significantly higher than that region was seeing in 2018, 2017. So even if it was a downturn, from a few years ago. I find this so useful in demonstrating the value of research to go beyond generalizations. This is going to be so important as the industry becomes more dynamic. Now, in the MENA region, funding is still cited as a hindering factor, but as well, and even alongside the lack of a skilled workforce. And you see that macroeconomic factors is being cited the most frequently for fintechs in this region. We also asked fintechs about their user bases and about scaling services to new customer segments. We actually asked a number of questions related to underserved customer segments. Most fintechs are developing targeted products to different consumer groups, and consumer education was found by fintechs to be the most prominent hurdle in scaling services. So this is more specific than growth. This is about their ability to scale services to new customers. What's so interesting about this is how consistent this was across regions, across verticals, and also levels of economic development. We did analysis looking at advanced economies and emerging markets. And we're seeing consumer education cited strongly in all these markets, which is interesting because consumer bases, they really vary around the world. Cultural differences, infrastructural differences, purchasing power, and plenty of reasons. And further, fintech business models are different as well. So we also see that other challenges cited are a highly competitive market, which may be expected, and also high compliance requirements. And in the MENA region, it actually deviates from the global trend. High compliance requirements were the most commonly cited challenge to scaling services in the region, although note, not the only challenge for sure. So our research also asked our panel about diversity efforts and gender representation internally. And fintechs are reporting strong executive level female representation. There's certainly room for improvement in the years ahead. It is outperforming the finance sector. One source found firms in finance reporting 18% of their C-suite identifying as female. Notice this is a very strong average across regions. You can see all the regions are reporting kind of close to 30 or 33%. And you can also see MENA here in purple is on par with the global average. One interesting analysis that we were able to do is a correlational analysis between female executive representation and orientation to female consumers. We found that female companies with at least one female executive demonstrate a larger female consumer base and products designed to target female consumers. So this is something that has been discussed and hypothesized, but there's little or infrequent actual data on such a correlation. So now we're at the end of the preliminary findings that I'm going to share with you today, but we're not at the end really, because our initiative is called the Future of Global Fintech. And we asked our panel one very straightforward question. What do you fintechs find to be the most pressing issues for the industry in the near future, in the next 5 years? And out of 8 topics to choose from, artificial intelligence was the strong leader. It was followed by the digital economy, embedded finance, and open banking. Those were all quite close and near the top of the list. And this is interesting, as all these topics will impact fintech business models differently. So what AI means for digital lending models in the next few years will be very different than what it means for insurtech. What open banking means in the next few years for digital payments trajectory will be very different than what it means for insurtech's trajectory. Now, the prominence of AI holds true for almost all fintech verticals. And one reason for this may be the likelihood that the impacts of AI could really be compounded as it affects fintech from different angles, from challenges to business models, to consumer engagement, to emerging regulations of AI in financial services that fintechs will have to respond to. So I want to finish by drawing attention to this graph here. I'm a researcher, we love graphs. And these are these 8 different topics. And I want to draw some attention to those on the lower part of the screen. These are topics that are comparatively less important, or were seen as comparatively less important to fintech in the near future. But in fact, this kind of really supports why we started this initiative. You know, the ranking on this graph is going to change in the years to come. And the topics on this graph are going to change as well. And one of the things we look to do in our research is, gaining insights about them, and gaining those insights will be useful for everyone across the ecosystem. So I hope that was an interesting snapshot. Please look out for the report in January. And now let me turn it over to the panel.
Much, Jill, for providing these insights. Good afternoon, everyone. My name is Gabrielle Anzarillo, and I'm a financial regulator here at ADGM. Let me introduce the rest of our panelists. Jill, you've heard quite a bit from her, so I'm going to turn it over to Drew Propson from the World Economic Forum and Nelson Chow from the Hong Kong Monetary Authority. Welcome, everyone. Now, we'd like to discuss a few key points because there were evidently some more surprising insights that came from that review, from that research, and through the panel of questions that you asked these fintechs from across the world. So I'll really kick it off with Nelson first. Hi, Nelson.
Sure, yeah.
Nelson, you're a very experienced former banker, but more than that, you're just a wonderful seasoned regulator. You've been with the Hong Kong Monetary for how long now?
Almost 20 years.
Almost 20 years, yeah. Exactly. And out of those 20 years, you spent 7 years basically as overseeing fintech and developing the ecosystem there. Now, one of the things we mentioned in the presentation is that fintechs are essentially struggling a little bit in today's climate, right? We talked about macroeconomic factors. We talked about fiscal prudence, monetary tightening, fluctuating employment, decreased funding. So what do you do in that situation? How can you help an ecosystem grow when there's all these adverse effects that are happening?
Yeah, sure. I think I agree a lot with the result of the surveys, and I think this is also what we hear on the ground funding source, and also regulatory burden. It's actually top of the list. But if you look through the cycle, sometimes when we see a funding shortage, it probably is not because of a lot of the reasons fine. It's only because that we have a funding peak around end of 2021 or early 2022. Was that money supply was just too, there are too much money supply. And it actually changed the behavior of investors and the startups. If you
Are
look
you
through
saying
the,
money made people crazy?
yeah, and yeah, it was. In fact, if you look through the cycle, if we remove those quantitative easing time or ultra low interest rate, we are actually back to normal. It's not new normal. It's actually back to a more normal state. If history is a guide, and if you look at what happened after .com, in fact, after that, those tech companies who survived have become the biggest tech companies on earth now. And some of them are actually the biggest company by market cap. So I think it may not be a bad thing to see some of these issues that we are facing. But back to the what central banks or policymaker in general can do, we are both kind of on the same space. Well, what we did at that time during the funding stress, we talked to a lot of the startups and what do they want from us. In fact, surprisingly, they are not asking us for funding. Well, probably because they know that we won't give you. And in fact, they asked us to do matchmaking with them. So that's why we introduce on top of regulatory sandbox, we do some proof of concept funding, very tiny, but we match make them with the financial institutions. So they have these references to work with more banks and also banks outside of Hong Kong. So I think what they need from us, the policymakers or regulators, is actually to help them work with the banks.
To be a facilitator,
Yes,
essentially.
yes.
Jill, I'm going to come back to you for this next question. One of the things, so as part of the Cambridge Center for Alternative Finance, you are literally in the business of capacity building. You're in the business of education. And one of the things that surprised me the most in this study is this mention that evidently the fintechs were struggling with consumer education, consumer understanding of fintech products. And so my question to you is, who is responsible for educating consumers on use of these fintech products? Is it the fintechs themselves? Should it be, Nelson and I? Who should it be?
So this topic overall is a really important and interesting topic, and I think I want to be specific that the research is showing this is what the industry has identified as the key hindrance and challenge to scaling services to more customers, and I think what that is kind of giving insight on and demonstrating is. One, this is my view, having been in the industry for almost 15 years now, is the majority of fintechs, they care about their customers. They don't want to defraud them. They want consumers to be educated on the products they're using, and they want loyalty. They want to keep them. Now, further to your question about kind of whose job it is, it's a great question because Drew and I together, we've been exploring this actually quite a bit over the past year. We had a series of regional roundtables where we brought together stakeholders from across the ecosystem and had kind of different presentations and also discussions on different digital financial literacy initiatives. And we saw successful initiatives from the private sector, from public sector, public authorities, and also hybrid models. And we actually wrote a blog about it, so you can read. And one thing that has come out is it's no one part of the ecosystem or one actor's job. Consumer education is going to be really important in digital finance for regulators and policymakers. They care about having educated consumers, resilience, of course, and also for the industry, for the actors themselves, for some of the reasons I said earlier.
So it's in everyone's favor to have educated consumers, essentially.
Yeah, and the incentives are aligned, right?
Yeah.
And in this particular area, they are.
Drew, over to you. Now, this was also one of the findings I found quite surprising. So, in a former life, I used to do venture capital before I became a regulator, and I was always investing in fintech firms. And we always used to say that it was very, very hard to invest in female-led, executive-led fintech firms because you take finance, not very women-led. You take tech, also not very, women-led. You merge them to have fintech, it's going to be almost impossible. And yet, we're seeing something like 31% of female executives within fintech firms. What are some of what's happening to allow this to happen?
Yeah.
Redundant.
So thanks so much for the question. I think this is the magical question, right? If we knew exactly what, and we could point to one specific factor, we could really home in on this factor and just make sure that we're giving it a lot of attention so we continue to see a similar trajectory and more women in the field. We don't, unfortunately, have tons of data pointing us to one factor, but I do think if we look at the full landscape, we can give some thought to maybe a confluence of factors or a few different components that would lead us to where we are today. So maybe I'll highlight a couple that I think are important. The first one is awareness. So I don't know when this past life of yours was, if it was a few years ago or a long time ago, but the fact that we even noticed that there weren't a lot of women in this space is huge. I think when I was growing up, it was very well known that leadership was all men, and that's just the way it was. It wasn't even talked about. So the fact that we're talking about this is huge. You can't fix a problem if you don't know it's there. So I'll call it a problem, but it's an issue, or we know that we're better off with a financial system that's a bit more diverse, right? So awareness, number one. Number two, I want to say education, but I think maybe a better term or better phrase here would be knowledge network. So if we're looking at women and educational aspirations and where we are today, we know that if we're just looking at enrollment for universities across the globe, women make up about 54% of that. So this demonstrates that women are seeking out better educational opportunities. And I'm not saying that to be an executive or an entrepreneur, you necessarily need to have that undergraduate degree, but it definitely does help with, one, a baseline education. With that comes certain confidence that you can build something out, and then also connect you to different individuals and resources such that when you do have a business, you come up with some challenges, you have people to go to or different resources available to overcome those challenges. So awareness, knowledge network, I'll say. And then the third piece, which is probably the most important right now or a key factor, would be a flywheel. So if you have women in leadership positions and executive positions, you can't be what you can't see. There's a lot of truth to that phrase. Once we start to have women in these positions, those coming into their first career, their second career, are able to see that this is an opportunity for them or something they might want to aspire to or pursue. So I think the three of those together really helps. In terms of fintech specifically, it's also just really helpful for the bottom line to have a female executive in place, especially because we know that fintech is really good at offering or expanding products and services to individuals at low cost, to individuals who previously were underserved. So if we're looking at how you expand the pie and looking at that market, then makes a lot of sense to be targeting women, and it's helpful to have women in place for that. So again, I think it's a confluence of factors, but that's what I would point to.
It's surprising, but it's very positive. I have one final question, which actually fits in with your final slide on the presentation. Now, unsurprisingly, artificial intelligence was actually mentioned as the thing that fintechs were most aware of that could change, their lives and change their products in the next 5 years. I think many people in the audience can actually relate with that because they're learning how to integrate AI into their own work, into their own tools. But nonetheless, finance and, by extension, fintech is a highly regulated industry, right? So how can fintech companies ensure that their use of AI actually fits industry standards, fits this sort of regulated mold? Nelson, I'd love to have you go first, and then Drew, I'd love to have you comment.
I would suspect you asked about 5 years later, what will be the ranking. I will bet that AI will still be on the top.
Okay, so you're bullish on
I'm very
AI.
bullish. The reason behind that is we are standing on the shoulders of giants. We all, GPT did not emerge all of a sudden. It's based on decades of research works and hardworking, intelligent people behind that. I still remember when I studied artificial intelligence, machine learning, and neural network, it was a torturing experience because technology was not there. But now you have the very high performance GPU, you have the storage, and you have the data. So I'm very bullish on that. But in terms of the regulatory requirements, I would suspect AI is at a tiny better positions because we regulator usually we just find someone responsible. So if you are using
we want to point the finger.
yeah, and if it is like a co-pilot scheme, I think it makes perfect sense because we will still be able to find the individuals that is making the mistakes.
Oh, okay. Drew?
So I think your question was really, in particular, focused on the regulatory piece and how you can kind of stay ahead of this, right? I think it would echo everything that Nelson has just shared, but I would also say that there's one, for fintechs, it's great to try to have a seat at the table. So see if you can be talking with your policymakers, your regulators. We also saw in the research that most fintechs do have a positive relationship or feel confidently about the regulators. So take advantage of that opportunity to continue those conversations so you're at the table as things evolve. And then the other thing is, I would say there are certain applications of AI that we know are pretty solid. It's great at pattern recognition, so you can use it for fraud detection and the like. But it's more of these kind of like nuanced new areas of generative AI that are really under question here. So there's nothing wrong with being the second mover. Sometimes there's a huge second mover advantage. If you're not sure, I think trust came up in an earlier panel. That is the foundation of the financial system. You really need that for your company. If you're not sure, it's okay to hold back a little bit, wait for things to happen, put yourself in a good position so you're prepared to run when it becomes time to take advantage of the new regulation or know the framework a little bit more solidly. But that would be my advice.
Wonderful. Maybe slow and steady does win the race, ultimately. Sometimes.
Yeah.
Ladies and gentlemen, thank you so much for joining us for this session. I would like to thank our panelists. And the research is coming out. When can we see the report?
January 17th, 18th, somewhere around there, that week.
All right. So mark your calendars.
Yeah.
Thank you so much. Thank you all.